Hey, how's it going? Welcome to the Nobody Podcast. I'm John Kellogg. Wherever you are in this spectrum of time and space, here it's November. Oh my God, July 20th. Here in sunny and warm and hot Southern California. So I've noticed the things that have been going on recently within America here specifically, and especially here in California. It's most of the stuff is related to economics, which is something I actually know quite a bit about. So today's episode, instead of just ranting and raving, I got some material here for you guys. I want to, give you my 2 cents, and hopefully it will help everyone understand what is going on in 2022 and what you can sort of look forward to, quote, in 2023. So we're going to be a little bit different here. I'm not just going to rant and shoot shit at them, just shoot the shit and, use this as like my verbal diary. I'll actually be having something here that'll hopefully help everybody. So this is like the American red pill. This is American economy. This is my red pill episode. This tell you how it really is. The American economy is actually two sort of different economies rolled into one. And you have a national or a government economy, and then you have a personal or a individual economy. Our national economy is run on Keynesian economics. The personal economy is essentially on free, efficient market economics. You can call it whatever you want, but both of these economic theories are true, and you might as well just call them economic laws. I think of them as these are parallel realities, and we as individuals are subject to the realities and the laws of both of those realities. So this is an economy. Essentially, what an economy is just the total of assets and liabilities of a society and the individuals within that society. So when we talk about an economy, it's just all the stuff in the economy. Now, an asset is a good or a service that provides an income. Think of this as a financial net positive. A liability is exactly the opposite. It's a good or service that needs an income, or think of this as a financial net negative. Now, anything and everything can be either an asset or a liability, and things are often both. It just really depends on how you use them. So, whether it's a house, a car, a dog, a computer, solar panel, or art, they can be either things. While your income property, let's say an apartment building or something that you have in which you are renting out and getting some sort of cash flow or income from, that is an asset. While the residence that, like for me, that I live in here in Southern California, that's a liability right up until the moment I sell it, and then it's an asset. This includes things like, your computer. If you're using your computer for mining crypto, then you can consider it an asset. If you're using it for school or for work or for me, shooting the shit and for fun, it's a liability. I guess I could argue because I use my computer for stocks that it's an asset, but I wouldn't consider that. But definitely things like currencies or currency instruments like dollars, US bonds or treasury bonds and things of that nature, corporate bonds, or gold or Bitcoin. All those things are definitely they have a prescribed value and are readily exchangeable. And then for another thing is don't fall for the whole cash is trash baloney, right? It's bullshit. And I'll show you exactly why in a few minutes here. But and essentially because anything can be a liability, you really need to avoid purchasing and especially financing things that depreciate in value, especially goods like cars, precious stones, especially diamonds. I hate to break it to you ladies, but all that shiny shit, it loses its value the minute we give it to you or take it out of the store. And anything that are luxury brand name goods like apparel, and anything most often that you buy using credit. Any unpaid credit balance is most definitely a liability, mostly because it's probably earning a way higher interest on that balance than you can ever get outside of being really good in the stock market. So, the first economic reality that we're all subject to is our national or the government's economy, and this runs on Keynesian principles. What it essentially is just to cut to the shit, is it's a collaboration between Wall Street and Washington, D.C., where Wall Street dictates the economic conditions to the government in D.C. This is most certainly a hand in glove relationship where Wall Street executives are jumping between Wall Street and top DC bureaucratic positions. This is jumping like fleas between dogs. This is very little different in China. It is practically identical with some slight differences, but it is essentially no different between a collaboration between the government in Beijing and a business in Shanghai. It is the same hand in glove relationship, except where the Chinese Communist Party, CCP, dictates the conditions to the business sectors, but you still have the same jumping between bureaucrats in Shanghai and bureaucrats in Beijing and business executives in Shanghai, where they are jumping back and forth between these positions like fleas between dogs. It's just a different version of the same American elitism. It's just elitism. You can take it, whether you want to call it American or not. This is essentially how elitism is. Now, what when I say the government runs on Keynesian economics, what this really is, what the Keynesians and what this principles believe is that a lack of demand is what causes recession. And it's the government's responsibility to stimulate demand by increasing the money supply. Now, keep in mind, when I say increase the money supply, that is inflation. Technically, it's called nominal inflation, but no one really gives a fuck about nominal inflation. Inflation is what we're talking about. So, to put it plainly, the government runs on the belief that recessions are caused by a lack of demand, and that it is the government's responsibility to cause inflation so that demand rises to encourage growth and avoid recession. The Keynesians believe that, like the Keynesians code, like a Jedi code, is inflation is good for demand, demand is good for growth, growth causes more inflation, which prevents recession. It's this one of these cyclical feedback loops. And it is true though. This does cause growth and it does avoid recession. But when I say avoids recession, I don't mean for the national economy. You'll see what group of people specifically I mean that it works for. And I'll give you a hint. It's not you or I, that's for sure. Inflation is essentially it is a government's hidden, silent, and fluid tax on its people. The government will continue to overprint money to compensate for their overspending. It will continue to dilute the currency, which makes our time and our effort and our money less valuable and has less worth in general. And those of us who cannot pay, right, we fall down the socioeconomic ladder. And and for those of us that do exceed this inflation tax, we are able to rise, all right, on that same socioeconomic ladder. Now, and yeah, I'll show you here in a minute. You'll understand the full picture here in a minute, but government will continue to print money at the behest of Wall Street. As government issues more treasury notes and money notes to print, they have to print to keep up. They have to continue to print this money to keep the value of assets up. Now, the rich just so happen to own a vast majority of these assets and these businesses that own these assets that profit from this. And while those without these assets continue to pay taxes and fund this Treasury Department continuing to issue notes that the Fed or banks will buy. This whole scheme is exactly trickle up economics. It's not a Republican thing, it's not a Democrat thing. It's a government thing. They're both doing this. They've both been doing this at least definitely since the 70s, but you can go back since 1913 that for sure this has been happening. But this just so happens to also be the same economic system that is used by monarchs, aristocracies, and dictatorships to seize and subjugate people to keep or maintain power or to gain power. That in every single instance, power is seized by essentially controlling the money supply, by seizing weapons and arms, and I don't want to say seizing social media or media and discourse, but definitely controlling and restricting discourse. This whole system ensures that money in the lower classes makes its way right up to the top. And since those in this under these Keynesian principles, since the core belief is money supply and increasing it or inflation, those who control the money supply control the American economy. And here in America, it is the Federal Reserve. The Federal Reserve is essentially it is a private entity. It does not have congressional funding or oversight. It is comprised of privately owned and publicly traded banks and financial institutions, clearinghouses, all the institutions that you could essentially say make up Wall Street and that keep this monetary system going this way. The Federal Reserve established a fractional reserve lending system. I'll show you in a minute why that's important and why it benefits especially banks and government. And they essentially control the government's money supply. It is the bank of banks. They provide funding. Now, their funding, when you say without congressional funding, well, they make their money from their own privately held securities and then charging fees for various financial instruments and services to all their member banks and the financial institutions. Now, what the Federal Reserve doesn't have, unlike their member banks, are shareholders. So the government believes, and this is what they say on their website in the Federal Reserve, that they act in the public interest and well being, despite being a private institution without public funding or oversight. They are the ones who set the policy and economic conditions for the American economy. And they do this because all of the member banks that have all of our money and know all of our net worth and know all of our trading and all of our investments, they report this information to the Federal Reserve, who then gives this to the government, makes judgment calls on the basis of economy. But mostly the real reason why that the government seeks their insight is because they control the money supply. They also oversee and regulate their own member banks. So you can imagine how good and how strict their regulations are. But essentially, what their job to do is they buy treasury bonds to distribute to the member banks so that they can meet the 10% requirement for fractional reserve lending. The reason why fractional reserve lending is important is because the money supply is controlled by the member banks as well. So coincidentally, right, and what the fractional reserve here is that before I go on that is it makes sure that 10% of all of our deposits that we store in banks are in the vault, let's say, so to speak, in the form of cash or some financial instrument that can be withdrawn by us. So 90% of our money is not available for withdrawal. Like we can't go cash it out, especially the more money you have. Now, coincidentally, right, the banks believe that more money for them also prevents recession, just like it prevents recession. That's why government believes it also prevents recession. And the theory behind fractional reserve lending is if the banks have more to lend, they can make more money and have increased the money supply or run inflation. So the theory is if the banks have more and the government has more, then everyone has more, and inflation continues to go up and the economy continues to grow. Right? It's a self-feeding feedback loop. Again, this is true to a point, but it takes the American economy with it, but not necessarily those at the top of it. They are insulated and fine. So here you see a creation of money chart. This is a very basic way of how the process works. Right? If you follow the chart here, it goes from the Treasury will sell the bond to the Federal Reserve, who buys it, then turns around and sells that to its member banks, who then lend it out, collect interest and cash on those loans, buy more bank assets, and well, I say the bank itself buys more assets, and then continues to collect on those assets. As you can see, this is a win-win for banks and government. They continue to have money. Government doesn't have to limit spending and they believe that it's good for the economy. Banks continue to create money to continue to fund the revenue streams that the government is creating for them or needs them to create in order to keep their spending up. This is easily the greatest Ponzi scheme in history, and this easily the dwarfs slavery as a model for oppression. Like there are whoever invented the international or commoditized the international slave trade stands in awe of this Ponzi scheme, where we the people continue to fund government spending and bank asset growth with our taxes and paying their inflation tax. So it, what they've created is a situation where the money supply is always flowing in favor of government and Wall Street, but never back here to we the people. See, we give the government money, they then sell the bond to the Fed to actually create more money or to create money. And then their member banks, through fractional reserve, continue to intensify inflation, get returns on those inflated assets, but none of the returns of those inflated assets ever return to us, the payers, we the people. This is exactly the intention of government. This is what government steps in to make sure that money is always flowing in favor of those that are purchasing services and goods with government. Well, essentially lobbying and this whole Ponzi scheme. And this is why I'm against more government in our individual lives and daily lives. It's ridiculous. It's a travesty. Now, the other capitalism that you and I are all familiar with is the type that we all have to deal with in our day-to-day lives in free market or efficient market capitalism. And essentially what this believes is that the free market economics is the relationship a market or essentially in free market economics. So the market is the meeting point between and the relationships between private property, free choice, motivation by profit, we can call that self-interest, competition, and limited government. All this creates a sweet spot, let's call it, for a market for people to participate in. They believe that the efficient allocation of capital is what creates profit. And efficient reallocation of profit is what creates more profit. Inefficient reallocation of profit creates loss. So their main tenet is that they believe that free choice for individuals is what also helps better adapt to market cycles and the order flows that the economies need to operate under. Now, I also need to take a minute here to distinguish something that's very, very important here, that our economy, the way it operates and functions, is entirely on free market or efficient market principles. And that's essentially where something called market order flow is key in here. And it's essentially the idea of where capital, goods, and services are allocated based on orders placed by customers. And so in this, governments do not create money. They are forced to earn it through profit, no different than you and I. And by them, they have to earn it. Their only ways of doing it are taxation, return on their investments, limit their spending, and efficiently allocating resources. So you can see why the government has no interest in going to this type of economics for them as the government. Now, the money supply is essentially in America is the only part of the economic system that is Keynesian. And it's essentially because it's the only thing that can be manipulated or so easy. I shouldn't say it's the only thing. It's much easier to manipulate the money supply and control the economy that way than anything else. But if you take a minute to apply the Keynesian principles to any other sector or part of our economy, let's say like housing, right? You see exactly why this model does not work. So here we're going to substitute house any time where you would see money supply in the previous slides or the Keynesian ideology. So here, it is the government's responsibility to stimulate demand by increasing the supply of houses, which leads to an inflation in the number of houses and a drop in the price and the value. Now, it's important to remember that value part. So, as more less expensive houses enter the market, right, that encourages more home buying, right? So the Fed, right, instead of increasing the money supply, would be building more houses. Now, that inflation in the number of houses continues to drop the price and the value of these homes, right, which theoretically leads to more home buying. Now, if this theory holds up all the way to the end, this feedback loop, eventually the price of a house and the value of it drops to just above the cost that it costs to build the home, plus the minimum number of profit that a builder would need in order to motivate him to take the project and to do this. Now, let's say, right, in housing, the number of houses, the inflation of houses falls below the minimum. Right? They need more houses. They need to continue to keep the housing market inflated. So, or the houses inflated. So, now houses have fallen below a minimum profit. Now a builder who normally would take just the minimum profit is now forced to take a loss. This is inflation. That is silent tax. Right? So on each house, instead of making a profit, he's going to take a loss. And he has to keep building more houses and continue to take more losses. Now, some of the builders are going to go out of business and they're going to end up on their asses and out in the streets, while others are going to survive. So our money does exactly this to us. The more and more that is printed, in the case houses that are made, the price and the value of our dollars drop. See, where you and I, the citizen taxpayers, we here are the builders forced to continue taking losses on inflated housing markets. Now, the beautiful thing about free market economics is that profits are not guaranteed, right? The supplier of the money, whether it's profit from government or from individuals or companies, they could lose their investment if they don't redeploy their goods and services in an efficient manner. Right? So money allocators, they have to assume the role of payer and supplier to attract the buyers. Right? Under the current Ponzi scheme we have now, right? The payer, we the people, um, pays the supplier, the government bond, the government, who always has a buyer, the banks, right? So when you hear winner take all capitalism, what that is that's Keynesian capitalism. That's Keynesian economics. That's the government. That's winner take all, not for you and I, them. They are taking it all and giving it to their people who give them money, businesses, lobbyists, or all that giant, that complex. Free market economics, however, this is called value added capitalism. This is the type of capitalism that is what pulls countries and economies out of poverty. Now, our heavily altered economy and our human behavior is what leads to these market cycles of boom and bust. Now, regarding the stock market specifically, this creates sector rotation. Now, during this different time, different sectors perform well at different phases of the cycle. Now, this is a very, very reliable method that dates way, way back to the Dutch Empire. I think it's sometime around like the 15th or 16th or 17th century. Not a history major. I'm not going to tend to be, and I don't care that much. But it's essentially, this goes back to the creation of the stockholder-shareholder capitalism. And it's still reliable today here in the 21st century. And just having this knowledge will definitely help you more reliably time market phases. More importantly, it'll help you avoid market traps or drops. And it will definitely help you increase your return on your investments. And it's not hard to figure out where we are in the cycle. I made this slide a couple weeks ago, so I think it's a little late and a little off. I say you are here at the other side of the peak. I think now we're more here on the right side of that peak line towards the downside, the downturn here. But you can essentially know where we are in this cycle by knowing what's expensive and what's in high demand, and by knowing what's cheap and what no one really cares about. Now, the best way to do this, to know where we are and to understand what to do and when to invest, the first and most important thing you have to do is start thinking for yourself. Free your mind and your ass will follow. Now, I made sure that I put plenty of cliche things here on this slide to drive home the importance of independent thought. But more importantly, now more than ever, we sure shit need more independent thought. It's really important that you don't have your bias or think you know things for certain. What is certain, though, is that the stock market is a reliable avenue to grow your worth and maybe create some wealth for yourself. Um, but you must also see the truth. And the truth is that the government will not behave any differently than it has been. So buy assets instead of stuff. You need to get out of this stupid American, this stupid Western world way of thinking of you need to buy more and have more. We have this weird thing where when we get more, we want a bigger house and we want more space, right? And we have these houses and this space because we want to have the people that we love most close to us and with us. And so what we do then is we get a bigger house that puts more space between us. And then we fill that space with more stuff. And we put more space and more house and more stuff and more shit between those and our loved ones that are supposedly so important to us that we need and want them in our lives. So why do we put all this space and stuff and all this crap with us? Makes no sense to me. The next rule, the next law, whatever you want to call it, the next thing you do is, I guess you can call it like if, if this is your A, then this is your 1B, I guess, is that just because it's listed though second doesn't mean it's any less important. You need to be patient. This is the one of the fundamentally most important rules, and be patient because there's plenty of time. There is plenty of air left in this massive bubble. Everything is going to be way, way, way cheaper. So wait for the panic selling. Wait for those, oh my God, the market has crashed headlines before you start buying. And even then, you might want to consider cost averaging down as a hedge against that, or against, maybe as a hedge against the Fed letting the economy actually crash this time. Now, Michael Burry, who in my opinion is the greatest investor of all time, you could put him up there with Munger, Buffett, whoever else you want, right? You insert your favorites here. But he knows what the hell he's talking about. His research says that the S&P 500 reaches higher highs and lower lows. So this would suggest that it's going to fall somewhere between 1862 and 1686, right? Here in July, it's still about $3,800. So that gives us a very long way to go before we have to worry about any kind of buying. That's assuming, right, the Fed actually lets the economy crash this time. Now, let's apply this sort of same logic here, and let's say the same analysis to the NASDAQ. So you can see here the dot-com bubble, there's a 77.4% swing. That was definitely a crash. Same thing in 2008. That was a recession, 54% drop. All right, 2018, when they reinflated the bubble, that was almost a 22% dip. COVID was a 30% dip, right? And again, right, we remember all that economic stimulus and all the money that's causing inflation now that we have. And now that we have now at the end of 2021, we had the everything bubble, which it dipped very quickly, 31%. So the question you need to ask while you're being patient is this a crash or a dip? Essentially, is the economy improving or deteriorating, and how much is the Fed going to intervene? Are they going to reinflate this again like they did in 2018, bring interest rates up until inflation, quote, cools, and then lower them right again? So the question you need to ask yourself is, right, what's happening? Now, if it is a crash, could be very well be. A lot of people really, really think it is. Right, 54% puts the NASDAQ from where it currently is, right, just about 7,400. A 77% crash like .com puts it at 3,700. So the point is, be patient because we have a long way to go. The other thing that's incredibly important to know is, like I said here in the earlier, is know your sector rotation. Understand the cycles, understand how you can use it so that you can help yourself buy when everyone sells and sells when everyone buys. Right now, the US, we're at the peak of our cycle or just on the other side of it, right? Oil is high now. Electricity is going to be high in summer. Especially as it gets on, we're just getting going here in Southern California. Natural gas is going to be high in the winter. You know it's going to be high with the war in Ukraine and Europe. So, yeah, as utilities start to move over, I think we're on the other side of this peak here. That's assuming, right, there is a big crash that has come because some of these recent pullbacks. This is just some of the hyperinflation we're experiencing. The other thing you have to learn to do is ignore the financial news. It's exactly the opposite of this red pill I'm giving you. That's the blue pill. It's little doses of bullshit to shade your reality and to try to make you change the way you think. What they're trying to actually get you to do is the intention of it is to make you react and to do something. They don't really care what, they just anything. Because Wall Street can't make commissions if you're not trading. And if you're not doing anything, right, and by trading and doing things, reacting creates an opportunity for you to make a mistake. Usually being patient works out. This is true for myself. I've learned this over the 10 years I've been doing this. And so if you're ever in doubt of ignoring the financial news, please refer back to the previous be patient rule. It'll save your ass every time. So I'm gonna tell you guys exactly what I'm doing coming up here in the coming crash. From here, this is near the end of July 2020 to whenever this dust settles. We don't know. There's no way to know any of this stuff, but I'm not going to be shy. I'm going to tell you exactly what I'm up to and what I'm doing. So the first thing I'm going to be doing is diversifying my money. Now, normally and in general, Mark Cuban is right. Diversification is for people who don't know what they're doing. But this time around, with the way government is and the way government spends its money and the way it let hyperinflation go and what I saw back in 2018 and to what I see now, I'm going to be taking my profits. I'm going to move them into other currencies like Bitcoin. I don't have enough worth to go into gold yet. There is costs for like physical, like costs for associated with the physical movement of gold and stuff and keeping and storing and taxes that just for me doesn't make much sense to do. But I will be investing in physical gold, but I'm going to be doing a combination of royalties, the royalty companies, index funds, and holding stocks in individual companies where I think that there is some good value there. But and right now, especially as things get to bad with the economy, right now Bitcoin is experiencing a little bit of a rally, but it's down, near around a little above 20,000, or it's above 20,000, but it was around 20,000 there for a little while, so things haven't even gotten bad yet. I think it's going to go down below that again for sure. But the other thing you can do is don't listen to half-truth bullshit like cash is trash. Um, the U.S. dollar is still the international reserve currency, and it's going to be for a while. China's in some deep shit too, so they're in trouble. Now, while it's not pegged to gold like it used to be, it is tethered to oil, which is also called black gold. So it's not totally worthless because the vast majority of the oil market is still traded in dollars, and so they're still valuable. And right now we see countries are, you know, buying treasuries because it's a hedge against a downturn in international economic recession. So now back then, right? It was ideal because the U.S. controlled its own gold supply, and it doesn't in any way control the international oil supply. But it's not trash. Let's just be honest. Next most important thing is you got to do the work. Have a plan. Know how to do your valuations or do your best to do valuations. They're definitely not easy. So I'm not saying they're not going to be spot on, but you got to, do something. Have an idea what you're doing. Make a buy list, set your price targets, what you're going to buy them at. For those of you that and us that have option that can trade options, definitely sell your options. I'm selling calls right now, and I'm definitely being a minimalist, cutting back on my consumption, saving my money. I want that cash. I'm going to be patient. I'm going to do nothing right now. I'm going to hold my trash cash, be criticized, laugh at me, tell me what I don't know what I'm doing, and then I'm going to buy whatever I want when it's cheap and when no one else is buying it. I'm going to do it exactly like Sage Buffett, Sage Munger, and Sage Burry did. Right now, I'm up 20% right now. Right? I usually don't like to go around saying, but everyone's down getting their ass kicked, and I'm doing all right at the moment. So, I'm not totally unschooled in this, but my whole point in saying that has nothing to do with me. Don't I'm saying is be patient. Let this cycle play out. Do what the others are say that not to do right now. Don't listen to Mad Money and all these people on the "Let Me Sell You Something" TV news, right? With it's sponsored by pharma companies who have a stock they just so happen to be trying to sell. All right, so the key to all this is very simple. It's buy low and sell high. Shit's high, so don't buy it. Wait, right? Buy stuff when it gets cheaper. Especially right now, wait on real estate. Right? The sector rotation, talking about that already, right? Just wait. Um, you need to invest in essentials right now. Healthcare, insurance, pharmaceuticals, utilities, consumer essentials, baby stuff, pet stuff, stuff that really is sort of, I don't want to say recession proof, but stuff we all need. After that cycle goes through, rotate, you take your profits from those, rotate into your finance, your tech, your consumer discretionaries, and you take your profits from some of that stuff. Maybe move into auto and then real estate, right? Check the cycle, see where it goes. But right now is not the time. And there's definitely a giant real estate crash coming. So any of you thinking about buying a house, be patient, wait. Give it 3 to 5 years. I know you don't want to hear that. It's not cool. It's not awesome. You can't fucking post that on social media. But do yourself a favor and be smart and buy low. Buy in the bottom of a market when houses are available and cheap. Get your value out of it. Okay. The other thing I'm going to be doing is I'm going to look at luxury goods, because the rich are going to spend the money that they've been making from all this, and they've been getting subsidized with this Keynesian stuff. So me, I'm looking for stuff with value, luxury goods with low price to earnings and price to sales. Always be careful and make sure you do your diligence, read the reports, especially your income statements and balance sheets. It doesn't hurt to overlook, look at the cash flow, but I'm saying, you got to really understand, especially those two parts. The other thing I'm doing is looking at other sectors in the bull phase cycle of the market, things like travel, consumer discretionaries. I wrote discrepancies here, but oh well, auto check, and auto and stuff. But like for instance, I have a couple very wealthy family members. They're traveling, so I know for sure travel and consumer discretionaries, luxury goods. They're definitely going to be something that people are going to enjoy. So the other thing is since COVID, it definitely seems like people want to be policed. At least enough of them. Maybe because I live in California, Southern California, specifically LA. It's maybe I'm skewed on that crazy side of um, that spectrum. But it definitely seems like the security state may potentially be a new necessary. So there's always billions for wars, right? There's billions for wars in the Middle East, 45 plus billion for Ukraine. Taiwan is certainly next. I just heard some crap about Pelosi's going over there potentially, unless China gets mad at her. I don't know. But essentially, there is no change in American attitudes this year in 2022, especially since this hoax of a war has gone on. Um, the defense sector is going to be fine. So not only your old school weapons makers like Raytheon, Boeing, Northrop Grumman, Lockheed Martin, General Dynamics, and BAE, they're going to do fine. However, they're not the biggest defense contractors anymore, but they are definitely necessary gears in the security state. Your big defense contractors now are your Amazons, Googles, Microsoft, Meta, and Palantir. Those are the new ones. Full disclosure, I'm personally invested in Palantir only on the basis that it seems to be the brainchild of the 0.01% people out there. You got government insiders, billionaires, all these people that are in the fucking Bilderberg group and they're fucking each other under mountains. These weird people, they're in that thing. So I figure, hey, the one thing that never happens is the rich never lose. So I invested in their pet project. So I'm not going to pretend. But that's just what I've been doing. That's what I think. That's my 2 cents. I appreciate you guys taking your valuable time to listen to my 2 cents. And leave any of your comments, any of your questions, anything you want to talk about. Let me know if there's other things about this you're interested in that I can talk about, like valuations and any of that kind of stuff. Let me know. If this economic stuff bores the crap out of you, let me know. I'll talk about something more interesting. But like I got a new puppy, so maybe I can do a new puppy episode, right? But anyway, guys, have a good one. Appreciate your time. Think for yourselves. Be patient, everybody.